All right, traders, I'm back again with another video. And in this video, we're going to look at a trade setup that we talked about yesterday that we took and sent this out to some members last night. We put out a video with probably like 7 Forex trade opportunities. Looks like not most of them kicked off, but this is one that did kick off. Some of the other ones are still, the market's kind of slow, not doing much, so haven't had the opportunities. But we had an opportunity here on the Aussie dollar. So I'm going to take you through what I was talking about. Then I'll show you. You can watch the video from yesterday that I posted. That aspect of where I've talked about the Aussie US dollar, and then I'll be done with this session. But basically, I did use Ichimoku. Okay, I used Ichimoku a little bit because even though it's sloppy here and there's a lot of crosses, yeah, the market was kind of flat. There's still a pattern in here. Pretty much a head and shoulders, what everyone talks about. I basically call this a three peaks. It shows that sometimes it shows that the change of direction is coming in the market. So you could see that, like, if I look at that, there's a peak here, then there's a higher peak, but then there's a lower peak, and then that usually signifies a change in direction in the market, almost like a 1-2-3 pattern that we discuss typically, that 1-2-3 reversal pattern. But this is a little bit different. A lot of things that you could look at and understand just to know the structure of the market, but one of the main things you want to really learn and understand are fractals. Okay, so I have a fractal course that will teach you all about fractals. I mean, it'll teach you every drop and also teach you how to trade those fractals, use them in your trading style. I show one style of trading them with a fractal break, but there's other types that I really use. Fractal break isn't my main style. But I want to get busy with this Aussie dollar trade setup we had. So I have to go backwards to show you what we talked about last night. Then I'll let you see the video, and then I'll be out of here. So yesterday the market was, let's go here. So yesterday the market was right here. We were using Ichimoku, right? So when you look at the market here, you could kind of see there was still that downtrend. Pretty much nothing broke it. It still stayed intact. I think we got out of, like, Ichimoku got out of whack here a little bit because of this big long candle. You could see where Kijinsen is down here, a little bit flat, than the movement. It was just a little bit different here. You could see throughout this trend down here, everything looked pretty organized, but then we had a crazy move here, which probably took this out of whack a little bit for us, and now the market starts to get back in order. So therefore, I like to use levels to trade the market. So I always want to have a level. So when I'm trading, I'm going to be at a level, because that's basically where you have your support and resistance, which is going to be your stop loss. You want to be as tight to your stop loss as possible. So support and resistance, those levels, like, I would trade at Kijinsen, and I'd be a little bit higher for my stop loss. If I'm trading at the cloud, I'll be a little bit higher than my stop loss. If I'm trading at Tinkinson, I'll be a little bit higher or lower for my stop loss, depending on what I'm doing there. So you always want to have a level to get into the market. I'm not just going to get into the market like here or anything just because. I want to get into the market where there's a bounce off of a level, or where I have something to support my trade. So when I looked at this, we had a TK crossover that was bearish, and then we had we had price coming up on Kijinsen and giving us this indecision candle right here. All right, so which the next thing would look like, we would be looking at maybe an evening star, or just with that indecision candle. You could see where I was marking my entry level here with a stop loss slightly above. Not much of a risk here, right? And then you could see we were breaking down through these bear fractals, which was a big sign for us. So with that, everything looked bearish. I still think, like, the cloud here got out of whack because of the big move we had here. It took the cloud out of whack a little bit, so we didn't see the change of direction. Really, you're flat here, right? So I lined this up and said that we had a head and shoulders here. So I looked at this shoulder, this head, and then I was saying this would be your shoulder, and then the market would basically come back down to this support and resistance level. All right, and then you want to see if we could break that level. That's basically what I was talking about. So after I kicked that out, the next thing that happened was the market gave us our entry, and you could see what really happened here. The market broke our level. We put a sell stop here with a stop loss slightly above. Now, if it would have triggered you first and then went higher and then came back down, you'd have got stopped out, depending on where you put your stop loss. I would put mine just a little bit higher. Now, when the market went higher, we also walked this zone. So this is a zone walk trade where the market goes higher before triggering us. So if it goes higher, we get a chance to move our entry even higher. So as the market moves higher, then we move even higher up to the point where we say we're not going to go any farther. We're just going to let the market see what it does, and then that market could trigger you in. So you could get a better entry here if you follow the move of the market, because you know that if it closes above this level, our trade's not going to happen. But just because it goes higher than this level, we can move our entry up because we already had what we were looking for with this indecision candle right here, right? So with that intact, we were able to move our entry up. All right, and then in effect, you can also move your stop loss up, or else you could just leave it where it is and say you're tighter. You don't have, you don't have that much risk on the table. But you always want to give the market some room to move. So if I'm going to enter at the midpoint here, I probably give it a little bit more room. All right, that just allows me to get more room, and also does allow me to eliminate my risk, and it allows the market to come down to me. All right, where the momentum is coming that direction by the time I'm triggered. Doesn't always mean that it's going to continue that way, but that's what you want to see. Then you had a big outside candle. This is basically a bull trap. Long traders got trapped big time. They didn't know that Kijinsen was here because they weren't using Ichimoku, right? So they didn't know there was a level here. So they got trapped on a big move. They saw the market moving higher. No one should just jump into a trade just because you see the market moving higher or lower. That's not the reason to get into a trade. But a lot of traders do that, and that's where they probably lost a lot of money on this, and they're not able to recuperate yet. All right, and if they even do. So what I'm looking at now, being in the trade still, you would look at this. So this level is where the support level is basically. All right, yes, this level, because you could see even when I went back talking about this, you could see this is a strong support and resistance level. So if we break this level, and tomorrow's Friday, Fridays are lousy days, but if we can break this level, it shows us that there's an opportunity to break this level. We can stay in the trade. We want to see this level get violated, and then we can move our stop loss down farther, and this is almost like a free trade for us, right? So that's what we were looking at. We were looking at the Aussie dollar trade based off of the Kijinsen bounce here. Had a nice bounce off of Kijinsen with an indecision candle. Now this turned into an evening star, but we more than likely, like I always talk about, we get in on the indecision candle prior to the close of this candle. So we're already in that trade, already triggered. So let's go back. Let's look at that opportunity that we discussed last night as I put this video out for members. All right. All right, so let's go to our next asset, our next pair, which is going to be the Aussie US dollar. All right, so Aussie US dollar, like the markets are really flat here. You don't see much of a real good trend. I mean, you're not seeing strong trends, okay? You're seeing moves here and the market giving us small candles, nothing major, nothing real good. But when I look at this, so you guys kind of like the head and shoulders aspect, right? So when I'm going to talk about head and shoulders right here really quick, but I don't look at it as the head and shoulders, but I'm going to look at this in this case. I'll call it three peaks, like I like to say. But anyway, this could be the left shoulder, head, and right shoulder. So we could be looking at the market going like this. We could be here. This is my peaks. This would be your head. This could be your shoulder. And then we could break. And the market comes down. You break this level for a trade. Now, I don't trade at that level, right? Because this to me is also, when I talk about fluctuation, that's a fluctuation level, right? Because the market is going to it'll break that level, but that's a strong support level sometime. So you're going to see the market bounce all that level in range. That's where we get our ranges from. So I really don't want to be getting into the market at that level. And that's what a lot of traders are taught, to get into the market at these levels. Therefore, we're looking at a good area to get into the market right there, right where we are, right? So what I'm really looking at is, let's go here. So we're setting up, looks like Based off of Ichimoku, you got a TK crossover. That's bearish, right? The cloud is all over the place because we're kind of flat a little bit. You got a couple crossovers, too many crossovers right here, but we're flat a little bit, and we're up to this Kijinsen level, and this is going to hold support resistance for us at this point. You got a crossover that's bearish, all right? So your TK crossover is bearish. You got a resistance level from the Kijinsen, and then you got price action setting up. So at this point on the daily, we have an indecision candle, right? This would be my trade setup right here. I want to see this -20 break. I want to see that -20 violation with price close below that. Until that happens, I probably really wouldn't want to set my entry order until I get a close below that -20. Now we got an indecision candle, and hopefully we can get the next candle to close, and we'll have an entry below this -20 where we could look at entering here. Now I'm going to show you where my entry at this point would be. Let me get rid of that because I want this. My entry at this point would be here. All right, I would put a pending entry there for a short, and I would look for a stop loss slightly above this indecision candle right here. Now, like I said, we didn't get our break below that negative, so this candle could determine that. We may get our break, but if we get that break, we could end up being lower than this level that I'm talking about prior to getting in on the -20 break. Right, so what I'm looking for is this level. I like this level to trade anyway because I got a little resistance above me with a stop loss above this level here. All right, and based off of what we looked at, talking about the head and shoulders move. It's a level where I like to get in instead of down here. I don't like to get into the market at this level. This is a strong support level, and I'm looking for the market to get there. If it gets there, that's where I'm going to bring my stop loss, so that will be a free trade for me if it violates. All right, so at this point, I don't see any super strong divergences, and really Williams percent R is not the one to use for that. But based off of what I see with this, I don't see major divergences. Let's go to the 4-hour. So 4-hour looks like it's trying to draw right with that Kijinsen with the TK cross and just following the market. You got everything moving to the upside. Looks nice, but you got some divergence off of this level here, and you can see you're flattening out. So that's where you see that divergence, and then maybe the market does drop, and that's where we get our trade because we're set up here. All right, so basically we're in that box with the price action where we're talking about entering the trade, and where our stop loss is. We're in between that box right now, and we want to see the market break to the downside here. So I'd rather probably look at this for myself on the daily time frame at this point. You could keep going back to check the 4-hour time frame to see if it looks any good, but I'm looking at the bounce on this Kijinsen and the indecision candle here and watch to see what I get. Now, sometime the market goes a little higher or gives you a better entry candle next. So keep an eye on that. That's your level right here. Level at about 71,404. Stop loss about 71,887. All right. So that's going to be the Aussie US dollar.